Let's start off with Bitcoin. This was the big sell-off. We went from 97k down to roughly 60k, a drop of almost 40% in the span of just roughly 2 weeks. And then many people were hoping for a quick V-shaped recovery. That recovery did not come. Yes, we had a slight bounce because some forced liquidations, they got bought up, but that bounce was not very long lasting. We tend to trend down again, and today is just another representation of the general trend. Now, what do I mean by general trend? I mean, of course, the best moving averages. So you've probably seen this by now if you've been watching this channel for a while. I like to use the best moving averages to time the Bitcoin market. I also like the same approach to time Ethereum, to time Solana. And the longer term of those two moving averages for Bitcoin, that's the 125-day, the line in turquoise, that has been bearish since October of last year. And that's also when I started to bet on falling prices. I like to bet on falling prices whenever we are below those moving averages. I like to bet on rising prices whenever we are above. And that's why the vast majority of the community here also hopefully didn't lose as much as the average market participant. Now, what does this mean? I've backtested all the moving averages from the 2-day all the way to the 200-day. The 44-day simple moving average is the best for Bitcoin. Afterwards comes the 125-day. If you do not use any leverage, then you can simply just use the 125-day and be relatively off the market. You do not have to trade the market as frequently compared to the 44-day. So if you've got a longer time horizon, just take the 125-day. If you want to squeeze out the last bit of performance, take the 44-day. We show both moving averages over here in this chart. And this is then the backtested result, right? This is 44-day. That's the backtested return, the line in turquoise. And that's buying and holding Bitcoin over the same time period. And here we've got the same for the 125-day simple moving average. So 125-day tends to slightly underperform 44-day, but it's less actively to be managed. We can just trade relatively infrequently and still have the majority of the gains. And because of that, our moving average vault also made quite a bit of money. That started in October of last year, very close to the all-time high in Bitcoin. We are up roughly 15%, while Bitcoin during the same time period lost 44%. So that's how we have been able to avoid the majority of this crash. Actually, measured in Bitcoin, we are up already more than 100%, right? If we just look at how many Bitcoin do we now own, if we avoid a close to 50% crash, if we even make some money during that time, we more than doubled our Bitcoin stack. And the back-tested performance actually gives us 115% of our buying and holding Bitcoin. So we are ahead of plan, right? We already doubled since October of last year, and usually that kind of doubling only happens once every 12 months, not once every 4 months.